Let's maybe first start just with this idea of the intersection of crypto and capital markets. One of the key pieces to that is the second people hear capital markets, they think regulation. And so when we think of that regulation, crypto historically has been maybe not so regulated, or the rules haven't been as clear. Talk us through kind of how you think about, from like the CFO seat, the regulatory environment and kind of what is clear, what's not clear right now.
Yeah, no, it's a really important question. And I think the dynamic we've seen in crypto, most of the investment and media attention has really been on a couple areas. Number one, your decentralized and semi-decentralized protocols and platforms. So that's kind of the spectrum of cryptocurrencies and DEXs and NFTs and DeFi. And then number two has been centralized infrastructure to support these decentralized protocols, right? So we can talk about a Coinbase there. And all of these are really important. But there is a massive opportunity to unlock efficiencies and value if we bring this incredible innovation that has been developed into the crypto land into regulated centralized assets, to put them on less centralized rails, less centralized pipes that are also consistent and aligned with regulator objectives. And the crypto world has been this amazing and vibrant testing ground to prove out a lot of these new innovations that we can make use of in conventional markets to make things like stocks work so much better, much more efficient, better for investors, better for the issuer. So like, let me give you an example of what this can look like. You start with an SEC registered stock, all right? And instead of that ownership being run simply kind of book entry, now that stock is a digital smart line of code that can hold information and perform functions and be run through applications. So some of the use cases, like I'm a shareholder in Nike, I no longer need to hold that Nike stock in a big bank or brokerage to custody it. I can custody it, I can put it in my MetaMask. The stock's on the blockchain, so we have the benefit of transparency. Nike knows how long I've been a shareholder for. Maybe they pay me a 10x dividend to reward me for my loyalty. Maybe I get a streaming dividend instead of one time a quarter to whoever happens to own the stock before the record date. I go to the Nike website to buy, my new LeBron shoes for my son or for me, whatever. And I get 15 off because I plug my wallet into the website. Or instead of getting Nike loyalty points, I earn Nike equity. And then this part's really interesting. I can then take that stock and I can trade it on whatever platform gives me the best price on commissions. I can take a margin loan on that stock at whatever regulator approved provider. I can lend that stock out for someone to sell short. And instead of having to pay that money to my custodian, I get to bring in competition and get the best opportunity. Something close to my heart. After an earnings release, right? Maybe I get access to the company's CFO through a token gated Discord. And I think the additional benefit here is like, the surface area of ownership and activity expands away from these concentrated custodians. And so things like the amount of asymmetric information that today benefits institutions because they're in the trading flow and it's through a small group of intermediaries, that hurts individual investors, right? But when you expand that surface area, that risk that goes down, and also risks get distributed so the network becomes more resilient. You start to diffuse some of these too big to fail challenges.
Hey you, did you like this video? Great, we make 5 of them a day and post them here on this channel. Make sure you subscribe, like the video, and see you next time.